Hey man, nice hat.
Hey, thank you, man. It's in
Oh
my
man,
hand.
I got you,
I've
man.
got the whole world in my hand. I got the whole wide world. Oh, that's
He's singing. You hear this, man? You hear this,
see,
Daniel?
see, I have excuse.
Get this,
I
get
choose not
funk
to.
out of here.
I
Get this.
choose
I feel
not
like
to.
if I put it on this side, it looks like I got on both sides of my shirt. Let's see. Boom.
A double embroidered, double-breasted polo.
Double breasted, double breasted, double logoed.
I think they got the point.
Okay. All right. All right. Take your hat off. It's going to get hot.
Uh,
Kind of like stocks or not. That's why in the back you see red today behind me. We haven't
we
seen a whole
like
lot of red
red.
lately.
Red means
Yeah.
you're in there. You're playing the game.
Volatility is going nuts right now. So let me go and get the stuff out of the way. My guests are Daniel Hopwood at the top right hand corner, and in the very middle, very big in the middle, is our CEO and Quanticus Maximus, Royce Wells.
I'm
Sorry,
scared.
get that lunch. They had Taco Bell on every Taco Bell, and I'm doing this. So let me go and get
That's
the.
not a sponsorship.
Let's get the. But if
It
you'd like
should
to,
be.
yo quiero Taco Bell.
We're gonna need a
Necesito.
bigger
Boy.
box.
Okay. All right. Here's the disclosure. We are not financial advisors, and this is not financial advice. This information is provided surely for entertainment and educational purposes only. Please always consult an investment professional before making any financial decisions. And let's get going. I guess I got to run down the facts and figures because, he's over there in time delay and all that stuff, or time ahead. Is it time ahead or time delay?
I'm ahead of you.
Oh, okay. There we go.
To
Now
get
your
to him,
time
we
is
would have
late.
to time
There's enough
travel.
of that
You
later.
realize
Yeah.
that, right? To get to him, we would have to time travel.
Ah, that you're going to end up taking the whole after the bell talking about that. So
I
let me
will
pull you
not.
off of that. Okay. You have
Not
the
that you will
ability.
realize, at least.
That's right. So here's the numbers. Dow Jones is down 0.71 to 46,590. S&P right at the edge again, down 0.53. Now it's at 66.99. Let's just call it 6,700, which is we know that's where the algos love it, is at 6,700. We've got NASDAQ down almost a percentage at 22.7 or 22,740. We have the dollar at 98.68. Crude oil is still under 60, although it is making a move up towards 60 again. We have the 10-year at just under 4. Gold pulled back, but now it's going back up again at 41.18. Silver is pulled back again as well, and it's going up now again at 48.18. We got Bitcoin pulled back to 107.58 right now. Ethereum is down to 37.87, and XRP is down to $2.36. And just everything just kind of pulled down. Is what's happening right now in the markets. What do you want to add there, Daniel?
Yeah, when I wrote my newsletter this week, and I also got to give a shout out to Royce's seminar video. I thought it was really good this week. That if you look at the S&P, at least I look at the futures, is that ever since we had that big drop, 2 Fridays ago, when Trump said that there were new tariffs on China, is that if you look at it, we're still trading just in the shadow of that candle. We haven't broken out to new all-time highs, but other than that one day, we haven't traded below the 50-day EMA or really below the arbitrage band's RSI, right? We hit it, but it keeps bouncing. And even today, sure, we had a red day, right? But we're above the arbitrage band. We're above the 10 and 20 moving day averages, and it's really like, this week's agenda is shorter because it's kind of been a nothing news week. There's been no truly big market moves that are of concern one way or the other. And I think we're going to have a sleepy market until we have any kind of clarity on these trade deals. Now, I think we all will agree that the market is going to move which way it's going to move, regardless of these trade deals, and the news will just be great cover for it.
Yep.
Which I'm sure Royce can talk about that, but the market hasn't moved. The dollar's gone up a little bit while gold's gone down, which to me would say hey, we might get a good trade deal where trade with the U.S. is going to be back on. And I know Royce talked about in his seminar, he'll give the exact timeline, but the dollar's up through, Q2 next year, which dollar goes up, people need dollars to trade. And if I were to use the markets to forecast news events, I would say that we probably have a good end of October as far as news goes. That being said, the one thing I want to hear about at some point from Royce is what's going on with Bitcoin. Spiked to 114, back down to today 107. That one's been all over the place.
Oh yeah, I definitely got something to say about that. It's always quiet before the storm, and it's always storm before the storm, right? So I think, or typically market movement, in my experience, always moves the opposite direction of where it wants to go. It got to scare enough people out of the market before it actually goes the way that basically most of the world wants it to go, except for those apes. They always want to go down. But, I'll stop poking at those guys. But the volatility that we've seen basically has allowed probability to expand, which should allow us to get to potentially all-time highs, because it's pretty much holding like a 107, 108 type level. And from that 107, 108, that should allow us to get to maybe 155, 160 for Bitcoin in the very near future. So I've been watching the same thing happen. I saw from that 2 Fridays ago fall from XRP, it fell all the way down to like 175, jumped back up to 250, keeps selling right at about 230, 235. And there's typically in October, crypto is rising. Why is it not rising this October? Because there's something coming in November, at least in my opinion. Across the markets, across banking markets, there's a ISO, I think it's 2025 protocol that's basically going to try to replace the SWIFT system. With that shift, basically banks are rebalancing underneath the covers, basically not hiding, but basically in plain sight saying, hey, let's shift. Let's get people to exit so that way we can get in. Move the markets out, move right back in, and see how many do it. And basically that creates volatility. And that volatility should allow us. I even saw something on TradingView. So someone wrote something like, this is a long play for XRP, and they estimated that XRP is going to be, and no, this is not me, this is someone on TradingView, estimated XRP is going to be somewhere around $30 to $40 by the end of November. And they're like, how?
Wow.
Well, if November 22nd happens like I'm expecting it to happen, I'm expecting, since the average price of a wire is about $25, and the average transaction for XRP is half an XRP. Put that together, I'm expecting XRP, it could be $40 to $50, which means if you're doing a single wire, you're going to spend about $20 to $25, and that's half an XRP. So that's a $50 XRP valuation, maybe by then or maybe slightly after. Who knows? But I do think the volatility, because there is so much backwards and forwards between Bitcoin, between Ethereum, everybody's thrashing. And typically that thrashing is not just thrashing just for I don't know, for no good reason. It's thrashing to say, hey, it's trying to see which way it wants to go, and then all it needs is that moment to break out. And I think that breakout will be to the upside, and it should make a very good Thanksgiving, something to be thankful for, maybe even a even better Christmas.
Ho ho! All right. So there's some. I said it twice, and there's only 2 other people here. No, I'm just kidding. So we got.
That you said hi ho. Are you a dwarf?
Oh, that's it. That's it. Are you high or are you a ho? Never mind. We got. which one do you claim? Anyway,
this will be on your evaluation.
It should already be done. Revised, huh? Let's go on. We have. Guess what? We have a show and tell from Daniel this week.
Oh, let's hear that.
Yes, and we've had it before. We've had it with Josh, and now we have Daniel's first one. So let's just hope I can get it correct here and do it right here. So let's do this. Daniel.
Being, or things looking bearish is that I think Royce and I have shared the general sentiment. Markets are probably still up and to the right for a while before anything bearish, like truly bearish, actually happens. And so this guy, Richard Excel, ex-hedge fund manager, now he teaches at one of the universities in Chicago. Pretty interesting macro weekly newsletter that he has for free on Substack that I would recommend to people. And he goes through 3 different times in history that are kind of similar to right now, right? So he goes through the roaring 20s, the tech bubble, and I think it's like the late 60s, early 70s, and he kind of compares them to where the market sits now. So obvious caveat is that you can line up these charts however you want, right? It's not perfect, but it's just meant to be like a representation of here are times that had like maybe kind of similar growth, like inflation, money stuff, like economic or political environments. So it can be kind of just as a general comparison, like an interesting thing to look at. So the first thing he looks at is the S&P 500 compared to the Dow Jones in the 20s, so the roaring 20s, right? We all heard about how we were re-entering that time a few years ago. And so if you look at this chart, it would indicate to you that we still have about 3 years until we would see a potential market top, right? So a lot of kind of similar things happened then to now. Obviously, during this time period, you're talking about like the Great Depression. So I don't think any of us want a repeat of that time. But it's, interesting comparison to see, I think a lot of people are, Jamie Dimon says where there's one cockroach, there's another. Like a lot of people are trying to point to cracks in the system. But if you can compare the timing, it's like market could continue to rip for, not months, but like years before we ever see like a true market downturn that isn't just a V-shaped recovery that we've been seeing the last, really since COVID. And then here's the other chart that compares the now to the 1990 tech bubble. So, we've also talked about on this show about the huge investment in AI, some people calling it an AI bubble over infrastructure build out. But if you were to, kind of create the direct comparison of now between the S&P for the tech bubble, is that we're only in the end of 1997, and the bubble didn't really pop until like Q3 of 2000. So when you think about that, once again, we still got like 3 years, if you're to draw the direct comparison, until the market would have any kind of correction in the time. And I think it's also important to, and you can read his full analysis on the post because there's a lot. But a lot of people have said, like, we're actually more in a time where it's either the 1960s, late 1960s, early 1970s of with like the potential inflation, the way we're kind of like money printing and things like just the economic conditions line up more. But if you look at that, it's the least likely because that was kind of like a lost decade where stocks just moved sideways. And you can see in this comparison chart that we've clearly ripped up and to the right from then. So we're probably most likely not in that kind of situation, which brings us back to the other 2 charts that he compared, that there's probably more up and to the right to come. And so I just thought these were a good potential analysis of what our future holds and kind of what we've been talking about on this show.
Yeah, that kind of reminds me of, Royce said this, a new industrial revolution, et cetera, and that's 3 years. And if we count last year, that would put it at 27 as possible downturn, which we've heard people say that it's not going to be this year, next year it's going to be 27, and that would fit those other timelines. So that does kind of
so would that be
does
Trump's
kind of make
third
sense.
term? Trump's third term?
That's a whole nother conversation.
Hell yeah, brother.
A write-in, right? They can write him in as elected, or I don't forget what it was. All the theories out there now about how he could do it, but then they would be saying King, King Trump.
Like you've
So
been
when I
able to
was
do something that no one else has been able to do. As a
Yeah,
president.
exactly.
Actually, that's not true. I think John Adams.
There was one other, I think.
When I was a kid, I used to always ask my parents who they would vote for. And they would never tell me because they just like didn't want to be political, or I'm a kid. They don't want me like telling other people. They're just like, I don't want to like deal with this.
Right.
My dad used to always tell me for years that he wrote in Richard Nixon.
Nice.
So it's just like for years, my was like, yeah, I just wrote in Nixon again. Like he still isn't winning, but
Mickey Mouse gets more votes, by the way. Every single presidential election, he gets trying to get
pretty sure like Kanye got like 5 million votes as write-ins the year he
that's crazy.
trying to be president.
Wow.
Hey, as long as it's not Diddy, that's all I gotta say.
Diddy, that's right.
Fair enough.
Vote for Diddy. Let's good job. That was your first one. Everybody claps. I should enter the applause here. His first chart. Yay.
Yay.
All right, good job. So like I said, it looks like if we go by that, and some people were saying stagflation, which would almost go towards that other chart, which you said doesn't apply here when it was just going across for 10 years. And it's up to the right. So that does match up with the other two charts, which would mean that we possibly have 2 to 3 more years or 2 years left of going up into the right. And then watch out. So
right at the change of the president. There's 3 years of this left.
Yep.
Yeah, that's kind of telltale. The writing's on the wall.
Can't say who do you think becomes president next? Mondami? Whoever the New York guy
He's got to do New York first. Yeah.
The socialist.
Yeah.
Oh boy.
Yeah.
This is why we can't have nice things, folks.
Yeah. It's going to happen in California and New York probably. All right, let's do this. Let's go on to.
I can't wait to see Texas just secede. They're like, nope, we're out.
Oh, I know, because they're getting all the. Texas is the tech capital now. Everything is down there, and everything is down there or moving down there eventually.
I heard something interesting in the news recently.
Uh-oh.
Memphis might have some new tech coming to the area. They're trying to make Tennessee a tech hub, just like Texas.
What about West Memphis? Just on this side?
No. I mean, in this general area.
Just in general area. Nice. I do keep hearing some stuff like that. I do, and I don't know. It's
I mean, think about it. Amazon moved here. XAI moved here. We got FedEx here. We got AutoZone here.
Central location.
Yeah. Nike's here. We got some really big players.
But you're hearing from here throughout Tennessee, or just mainly in this part of the?
Just in West Tennessee.
Wow, nice. Yeah. Bring those jobs on over here, or those robots on over here, which we can talk about later.
A little bit of both. Naysayer, sir.
No, Amazon is threatening getting rid of 600,000 workers and replacing them with robots. So that's probably they'll wait till 27 to do it, so that it'll follow that timeline. Again, so they can justify why it's going to go down.
Did you hear the international paper just laid off about 700 people in the Memphis area?
It's crazy. Well, FedEx too, right? I mean, it's.
Oh, well, I haven't heard anything about FedEx yet, but I definitely saw basically the IT people in the Southwind location. They've been given until February, and hopefully that means they have to find a job. That means I added 700 highly qualified professionals to the Memphis area. So if you know any tech companies that want to move here, they have ready-made IT.
That's true. The people are here. And what I was going to bring up, if it wasn't in the agenda, is the fact that AI and robots, when it was it was a concept not too long ago, replacing people, but now it's actually happening, and it's happening quicker than I think everybody thought. And so that's why your robotic stocks have made a little jump. and your AI stocks continue to go up, and they're replacing people. And there's actually, and I put it on my 3 things for tomorrow, but there's like
Replacing.
let me get there. And I put a, it's on tomorrow's 3 things, but it's a blurb about 800 well-known celebrities, etc., leaders in the world are now saying, ho, 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 let's stop this super AI from happening, because it's basically going to be smarter than humans and cause, let's just say, a lot of secrets maybe to be revealed.
AI.
Yeah.
Super AI.
I'm just guessing that maybe they're talking about quantum. I don't know. It's just going to keep getting smarter and smarter.
Well, the
And
more
smarter
information you feed, yes, but you
Yeah,
still have
exactly.
limiting.
That's what I call Royce behind his back, super AI.
It's a Royce robot.
Yeah.
Hey, there's a little shop of horrors here.
Would be horrifying.
Whenever I have a question on where a stock's gonna go, I ask Royce GPT.
Yeah. Hey,
There you go.
You know we have one of those, right?
Yeah, it's you.
If you didn't know, I'm not telling you. Never mind.
Well, you created it, right? I mean,
I did.
I asked
from what was available.
A godlike figure that created Royce GPT. Royce himself.
Quantimus Maximus GPT. All right, let's
confirm, no deny.
So let's move on to the this whole leverage thing, which is what kind of jerked the markets. It's all these it's the back and forth between China and Trump, basically. China says they're going to do this. Trump says he's coming back with this. He just said he's going to restrict certain things now from China as a result of what China said about rare earths and limiting those from coming to us. So then he jumps down to Australia, makes a deal down there. But my whole thing is it's still got to be refined, and 90% of all that stuff is being refined in China. So are we going to create somewhere else that can actually refine these elements? I don't know enough about it scientifically or process-wise.
Why does it take someplace else to refine it?
I don't know. That's my question. I don't know if it's why they're the ones that do 90% of it. I don't know. It's because they supply most of it. I don't know. What do you think?
The reason, from my understanding, is that, so, they call it rare earth metals, right? We all know, I think by now, that they're not actually rare, right? The reason they're called rare earth metals is because they're semi-difficult to mine, but the real issue is that, is that when, after you take them out of the ground to get it into the material state in which they're usable, is like extremely dirty and like a very heavy process. And more or less, it's like, I forget the exact time period when, but there was just a point where like most of the Western world, right, wanted to be green. And we were just kind of like, kind of NIMBY, like we just don't want to do this. And China was like, hey, we'll do it, right? Like China's willing to more or less destroy their environment at the ability to. I'll tell you a story afterwards. But it is true. Like, and China's just willing to, not have the same like environmental concerns that a lot of like Western countries do. So they're willing to produce it. So that's how they ended up producing 90% of the rare earths, because they're just okay with like dealing with the environmental cost of producing the metals. But this is obviously become a concern for now pretty much everyone around the world, because rare earths are used in the electrification of cars, they're used in your iPhone, they're used in ships, they're military, military, very important for EV batteries, which is where the world wants to go. So it's become a very big like point of control and contention in this trade war. So like Darin said, we have a deal with Australia as like a posturing thing to show China like, hey, we don't really need you. Question is, how much does that really alleviate the rare earth concerns when, like you said, they're producing 90% of it and mining 70% of it, so it's quite high. But I do find this deal a bit funny in the sense that this comes about 2 weeks after Australia agreed to start dealing with China in the Chinese renminbi in the iron ore market. So essentially, that was one of the first de-dollarization plays that's really become popular between a major Western country and China.
That's pretty ironic, isn't it? I mean,
coincidental. I bet.
Well, the irony, I think, is the fact that to enable to be clean, we have to do this very dirty thing. That's pretty ironic. And so, and China's the only one saying, yeah, we'll do it because we've always been dirty. And they have. They're the ones that aren't going to follow any type of Paris agreement, blah, blah, blah. I'm not going to clean up anything. And then they're the ones that are making a majority of the problem in that area. But then the whole world goes to, we need to lower ours. But in reality, if just China would lower theirs, the whole world would be a lot cleaner. And so it's almost like it's a play on purpose. So now we're going to Australia, and they're very environmental down there. So I don't think they're going to refine it. So where are we going to refine it? Are we going to find someone else out there that can? I mean, that can produce it and be dirty to the world, and then have that as their face, as the country that actually said they'll do the dirty work too, like China. So yeah, I think it's very interesting to see where it goes from here. And this, like you said, I think it's more of a media thing going down to Australia because they still got to be refined.
I personally think that they're going to use the Space Force to go strip mine asteroids. That's where I'm at. Let's go.
I seriously, other worlds. Yeah, absolutely.
You know, that's why the Winklevi twins said Bitcoin's more valuable than gold, because Elon was going to go mine asteroids for gold, and that gold's indefinite and Bitcoin is not. And it's like, that's a crazy theory.
Nah, it fits.
I'm not saying it's like not impossible, but they were saying this in like 2020, and I'm like, yeah, the guy's launching rockets into space, but like, I don't think he's landed one on an asteroid or mined it yet.
What? Say it again?
The Winklevi twins were saying that Elon's going to send rockets to asteroids and mine them for gold.
Yeah, no, I heard that part. The last bit I missed.
Yeah, they were saying that like 5 years ago, and I was like, last time I checked, he hasn't come anywhere close to that.
Hey, we've made it to Mars. We have pictures from Mars,
but we haven't mined it and returned gold. That's a huge
that we
step.
know of.
That's true. We know we've taken samples.
I think it would be pretty big news.
We've taken samples.
Well, would it be big news? You think they would go like, "Oh, we came back with this much gold"? No, it'd be more like, "Yeah, let's go cash that in."
And then all the other countries would be sending things up there, and it would cause a big space race, so to speak, to Mars to get gold.
You know, the Space Force is exactly that, right?
Yep. He created it in his last 4 years. So
exactly.
And getting ready for now.
Keep up.
All right. Speaking of gold, here's a transition. We'll talk Goldman Sachs.
2028.
We're going to move on to Goldman Sachs, as in sacks of gold. Hey, there you go.
Right?
All right.
There you go. I knew you could do it.
It fits. All right. So, you're saying here that the banks are crushing it, but are they? Because here's the deal, and that's, if you look at finance, it really hasn't done that great lately. This last ER was good initially, but the banks are still, I think, struggling, and it's because of this whole crack, or what was called the cockroach, which you talked about earlier, that is happening underneath the underbelly, if you will. These couple of funds that have gone belly up because of let's just say weak investments and not trustworthy investments, etc. So do you want to kind of explain what you were talking about there, Daniel?
Yeah, so when we look at the earnings, let's just say for Goldman, In the third quarter, their profits jumped 37%, which is pretty big. They said a lot of that came from their investment banking arm, which kind of shows that making deals, IPOs are kind of back on the table, right? Which, for years now, we've talked about how that was really a slow thing, but with the new administration, that world is kind of back in play. And, Citigroup profits jumped 16%, JP Morgan 12%, Bank of America 23%. So all of the banks had pretty good quarters, but what you did not see is that all of their stocks jumped up a ton, are making new all-time highs, right? If you look at the XLF, which is an ETF that tracks the financial sector of the S&P, it's really kind of rolled over since, mid-end September. It's not down a crazy amount, but it's by no means does it look super bullish. And a lot of that has to come with concerns of what's kind of actually underlying happening in the market, right? So we talked about the private credit market maybe kind of growing too big, and there's some kind of signs of like a slow collapse of some things when it comes to like Tricolor or First Brands, which, banks like Jefferies had really big exposures to, and actually JP Morgan has exposure to as well, but it's kind of unclear. And then Bank of America, which is one of the biggest banks that serves, kind of average retail customers, checking accounts, credit cards, that they're seeing spending at the bottom is kind of frozen, right? People that are not in the, what was it? The top 10% were made up for 50% of the spend in the economy, right? So all the other 50%, what they're seeing is customer deposits are not growing, people are not spending, and no real lending to that group is being done. So you're kind of seeing a contraction in the market at the lower half. And obviously we have to wait to see how consumer spending comes out for Q3 and whatnot in the second half to see what the top half is doing, because they make up the top 10%, because they make up a very large amount of the economy at this point. But there is signs of potential slowing. And, I think I have to caveat this just because of our conversation earlier. That does not mean that things are about to be super bearish, right? I think this is just going to be a tale of two worlds where the economy is doing one thing and the market is doing another, because I think currently our GDP growth, half of it is due to AI spend, right? Exactly. So, it's like the GDP growth was like 4%, and like 2.3 of that was from AI spend. So, it's kind of like what I was just saying with the top 10% of earners in the US being 50% of the spend. Like, you got to look at Mag 7, and if they're continuing to spend on AI and, those stocks are at least treading water, we're probably still up and to the right. But if you see that maybe start to look a little different, well, then you're kind of looking at everything not looking so great.
Yeah. And my take on that is basically because of that, and because they are propping everything up, the only thing that I can see that would derail the current up into the right motion is an outright war. But even war basically still makes the economy go up. That's what got us out of the Great Depression. That's what got us out of all this. So even if things started to collapse and AI started to collapse, they just say, okay, pull the other lever. We're going to war. 120% tariffs. Get them. So right now it's a data war, right? Basically, it's an arms race where those arms are nothing more than data. China has over 2,000 data centers. America has about 200 comparable data centers. And they're trying to get another 1,800 in a very, very short window. But if you can stop them from doing that, the best way to stop them is to distract them and have them build other things, have them use their resources to build out things to defend their ships, defend their borders, defend whatever. But either outcome, it still makes it up and to the right. So we have a couple of levers that we can pull. So I do not think that the AI bubble will actually burst. I think we'll just get used to it going on, and then from there, if there's a slowdown near the end of near the second term of Trump, it is almost impossible.
You mean the third term?
No. Wait. That's where it gets fun, right? Did you know that we cannot change our commander-in-chief in time of war?
That was a big speculation by the right at the end of Biden's term, is that he was going to get the U.S. involved in Ukraine because then they would stay in power and Trump couldn't be.
And so if this plays out like any narrative if you want a third term, go to war at the end of your second one. You heard it here first.
There you go. That would explain that downturn that you just referred to at the top here.
Yep.
The timing, yeah, absolutely.
But once again, if you go to war, it still won't crash. It will only go up and to the right.
Well. So the interesting thing with wars is that it's a sell the news and buy the event situation, which Royce is kind of saying, right? Is that the anticipation of it always goes down, but it's like, for example, you look at like Russia, Ukraine, stock market went down going into it. But the moment it actually happened, it just was up and to the right since then.
Yep, exactly.
Same thing with Israel, right? It's like now World War, I'm not really sure how that looks. I haven't looked into that one, but I don't think it might be down a little bit more. But Royce is right, like war, because of the economic value that it drives, it's normally good, unfortunately.
What I also find very funny is they remove indicators that allow you to see if war is actually ramping up. If you look at TradingView, notice U.S. Steel,
Yeah.
the symbol for X is no longer visible.
They've been talking today on news, though, about how steel is getting a good look now again.
Yeah, no data, invalid symbol, cannot see it.
Wow. That's crazy.
Right. No telltales here, but there's just things I happen to notice.
Yeah, I mean, I can't believe that's not on the news. If it's not, it may or may be. I don't know.
U.S. Steel just went away? What happened there?
U.S. Steel, yeah, is a big one. For steel, yeah. Wow. That's news. Way to break it there, Royce.
Hey, I'm going to break my own news.com.
That's right. For someone who doesn't really do news.
I don't do
news.
Just
create it. Yeah, just create it. Wow, that's interesting. I'm going to have to look at that after this is over. Let's move.
I'm willing to help any ape that's willing to listen.
You have to look at all the other steel related stocks and see what's going on. That's crazy. All right. Plus, I mean, look at it. We're closed down as a government. We're not giving out any reports right now. You don't think this wasn't all planned? And this what coming up Friday is when the CPI is supposed to the next big report. And instead of not doing it because the government's closed down, this time they decided they were going to do it Friday. And so the CPI will be available, even though it shouldn't be, because the BLS is not working right now. So there's something up to that, in my opinion. Why would they
can show what they want to show?
Yeah, that's 100% where I'm going with this. It's like either
it's an 8 for a day.
Yeah. it's on purpose, and they're wanting to either pump up something after it might drop a little so they can come out with a good CPI, or if it's time for the stock market to go down a little bit, they can say that inflation's going up and this is going to scare everybody, which will push the markets down on a Friday when all those options
never happen.
Andy. Anyway, it'll be fun to see what happens Friday with that. So that's only 2 days from now. 2 days. All right, sir Royce, do you have After the Bell crayons and charts?
I
with
do.
Royce Wells. All right,
and let me go to my choice because hey, Verizon, woo!
This is your surprise, huh? Verizon.
Yep, Verizon. So we had that nice little takeoff, but unfortunately it got beaten up and bloody. Let me turn off some of this stuff so that way you can actually see what I'm seeing. All right. This guy has fallen way too far. Our dashboard is saying that basically our Z Pro percentage is at negative 87%. Anything higher than negative 70% means it has to bounce, sort of like it did right here. So the fact that it's right here and we're sitting on the edge of the trend bottom, I am expecting a bounce to the upside. But unfortunately, right now, that compass line is still stopping the trend top from getting there. So even if it did go up, I'm expecting it to basically stall out at about 41.23. Not much of a ride, but that's not even about $1.50, maybe, if you're lucky. But I do think that after that, it will calm down, just hang out this way for a little bit. And overall, the next stop should be somewhere near that black line, around 42.50. And then if you can get past that black line, basically the sky is not exactly the limit. It might even hang out here for a little bit. And hanging out, while cool, doesn't get us any more money before Christmas. We like money. So from there, if we can get past that, the next big jump could be, let's pull this guy down, basically line up with our SAR, $45. So that's about a 15 or so % return between now and Thanksgiving. So if you want to make about 15%, go take a look at Verizon. And that's all I got. Back to you guys.
All right. Who would not want to make 15%? That'd be great. That was Crayons and Charts with Royce Wells. So it's time to announce that we have our last person off the schneid. Daniel, because of the last 2 hours out of 5 market days.
And you tell he didn't win.
Very last 2 hours, he pulls out this win over me. It was literally the last $2. We had a $10 channel, and all week it had been nice and comfortable in my channel. I was just living it up. I'd already picked what stock I was going to do this week. And the last 2 hours of today, it fell with the rest of the market. So, I mean, that's annoying. That's quite annoying. But congratulations. The bad guys get another win. Let me pull up these.
Sounds like you just try to like deny the congratulations like entirely. Like you just explained it away.
I had to give congratulations because I'm the host, so I have to be nice. We have so here's your update. We have the apes have 5 total wins, and the quantitudes now have 3. So here they come. The last 2 weeks they've won 2 in a row, and they're trying to keep that. So I'm sure whatever you pick, Daniel, for yours, you and Royce will team up and try to win again. And we got to tell Josh that we got to get moving here because I had all the stocks picked that I was going to do. So maybe you guys didn't have enough time to study whatever it was you're picking. So what is your stock, Daniel?
All right, I had 0 time. Good. My stock is TTD.
TTD.
Yep, the trade desk.
All right, we'll go back over here to, let's see. Are you looking it up there, Royce? TTD.
TTD, that's your pick. TTD. Okay.
Don't say it like that.
That's your pick. God.
That's your pick. I guess that's your pick.
It's at the bottom.
It's at the bottom. Notice that nice little
yeah. We have sound
effects. There'll be more.
Dink.
Up there. Dink.
It was TD Dink.
There you go. All right. So we got a $10 range, roughly from about 47 to about 57, if you want to play the full berth of that range. So what's
$2.50 a piece?
Capiche, capash?
$2.50 a piece. So we got 47 to 49.50. We got 49 to 52. We got 52 to 54.50, and then we have 54.50 and up. Boom. Is that right?
Yes.
Okay, and it's sitting right at 54 right now. Interesting. So the $10 channel is below where we are now, basically.
I don't know what to tell you. That sounds
all
like
right. Daniel, who's going first? Who's going first, Daniel?
Darin, we'll let you go first.
Why? Why would you do that to me?
You know what, Daniel? That's a +5.
That's what
you know, Darin, I was about to let Royce go first, and I was like, you know what? Let's spice it up before Josh gets back.
But Royce already did this before. Why are you doing it now?
Are you complaining about going first?
And I almost pulled it off.
We'll keep lobbing it up.
How big of a commie are you? Come on.
We keep lobbing it. Come on.
All right.
Come on.
Nope, I'm going to play it safe, and I'm going to do in the range we are now. So we're doing 52 to 54.50, and you guys can play around me.
Okay. Royce, you go next.
All right, 54.50 and up.
I had a feeling because that was the one I almost went to. All right.
So that's one thing I know about you. You are perma bear. And I knew it was safe when they gave it to you.
But no, because if it hits 54.50, that's up.
Yeah, but that is up. But good luck keeping it in that 70 cents range.
Yeah. Right.
All right. I'll go below Darin, and then Josh gets.
I had a feeling that was the way it's going to play the rest of the way. All right. We are all set.
I'll give you a shot, Darin. I'm not giving Josh a shot.
Yeah. Let's see. Yeah, no kidding. Let's see who can break out of the ones.
Was that Josh actually won while he was on vacation? That would show a true boss.
Right? You'd have to give him
I think I've won twice from weeks where I wasn't on.
Yeah, well, you weren't there. Yep.
Yeah.
Like, what?
Like showed up and I won. It's like, hell yeah.
You won. Hey.
You're the true boss then, Daniel.
Next week.
You're the true boss.
Yep.
All right, guys. Appreciate you coming in. Threesome. Hopefully we will be part of a foursome next week. We I can't stop smiling like that, Daniel. Hopefully we get Josh back. He is off playing around in other worlds, just like you are right now, Daniel. And we'll at least get him back into the U.S. For next week's After the Bell. There's so many things that could happen within a week here. So many things that Trump can say, and so many things with tariffs, and so many things with rare earth, quantum computing, which took a big tank this week, by the way. And will it bounce back? There's a lot of questions to be answered next week on After the Bell from Arbitrage Trade. Y'all say bye.
Later.
Yay.
Up and to the right.
Up and to the right. He got me to say it. He got the ape to say it. All right. Bye.